What's going on YouTube? Jordan the Maestro back again with another video. Welcome y'all, welcome back to my channel. Today we're going to talk about prop firm accounts versus personal trading accounts. Let's get started. So let's get started with what a prop firm is. So a prop firm, short for proprietary trading firm, is a company that pretty much is going to fund the trader based on the parameters that are set, usually like passing a challenge or set of challenges. After the trader has passed that set of challenges, they will be rewarded with a live funded account, okay? And these accounts can range from somewhat small accounts where you can get $5,000 accounts and $10,000 accounts to very, very large accounts, 100,000, 200, 300,000, even 500,000 accounts, and so on and so forth. Also, even giving traders ability to scale and combine accounts, making their accounts even larger. So all in all, proprietary trading firms have been a great addition to the trading space, and they really provide certain advantages to a trader who is coming up and really learning and trying to do his or her best to become profitable. Now let's get into it though, because there seems to be a difficult question in the community to answer, which is, should I go the prop firm trading route or should I just stick to building my personal account? Which is better? What are the advantages? What are disadvantages? Let's talk about it. So first, let's get started with the advantages of trading with a prop firm. So advantage number one, you're able to trade somebody else's money versus your own money. Now, this could be a very big advantage when we talk about the trading space. Far too often we know that blowing accounts is a part of the journey. And with blowing accounts means you're going to blow a lot of money. You're going to really lose a lot of money learning how to trade. But how much easier would it be if I could not necessarily blow as much of my money, but I could blow somebody else's money, right? So to say. And that's where prop trading firms really come into play, because with prop trading firms, so with $500 or $600, depending on the trading firm, I could purchase a 100K account and try to pass the challenge. And if I pass the challenge, hey, I am trading a 100K account. Or am I? So with $500 or $600, depending on the trading firm, I could purchase a 100K challenge. And if I pass that challenge, I get funded a 100K account by the prop trading firm. Now, 100K versus putting $500 in my personal trading account, especially if I pass the challenge, becomes very, very worth it. And in the end, if I do happen to blow that account and I break one of the rules of the prop trading firm, then at the end of the day, I lost $500 instead of losing perhaps $1,000 or $2,000, depending on what I would have funded my actual trading account with. That could be a very big advantage. And if you are skilled enough, and if you are talented enough to pass the trading challenge and you're able to even go beyond and make withdrawals, it becomes so much more worth it to get a prop trading firm account. Now, if we think about though, the 100K, 50K, 300K challenge, all of these challenges, right? Now, the only thing we have to make clear here is when they say you're purchasing a 100K challenge or 200K challenge, are you really purchasing that? There's certain parameters that are put in place where technically you're not really trading a 100K account. For example, you have a daily drawdown limit of perhaps $5,000 and you have an overall drawdown of $10,000. If any of these are breached, so if you lose $5,000 in a day, or if you lose $10,000 overall throughout the life of the account, you lose your account. You have violated most of their rules. Right? And to be honest, if that's the case, if you really think about it, are you really trading a 100K account? Technically, you're kind of trading a 10K account overall, but a 5K account day to day. That's technically what you are trading when they say 100K. So although there's trickery there and really having you think you're really trading a 100K account, and really in reality the leverage gives you about 100K. Like you have the leverage as if you were trading a 100K account. You could take certain lot sizes that 100K account pretty much would probably let you take. But the catch is you really aren't supposed to treat it like a 100K account. you should be treating it like a 5 to 10K account. And if you treat it that way, you really avoid blowing that account that much quicker. Ultimately, it's important to be aware of this, especially when you're trading the account, so that you can put yourself in the best situation possible to actually pass the challenge and get to withdrawals of the account. But it doesn't take away the fact that reality is you're trading somebody else's money at the end of the day. Whether or not this is a real 100K account, or whether or not the trades are actually being executed and this is not another demo account, you're still owed the money that you make from this account. And I haven't heard major issues from at least the main prop firms and the ones that are really on top. I haven't heard major issues from them with them not paying out traders. Ultimately, it's a great business model for them as well as the traders. Most traders are going to lose, and they're going to lose their money. They're going to lose their challenges, and that alone is going to generate enough capital for the business so that they can actually pay the winning traders out the money that they make. No need to execute any trades, and we still have enough money to pay out the ones who actually win. So it's a win-win. You still get your money, and they make money on top of that as well. So it is what it is. The next advantage is being able to fund your personal account that much quicker. So sometimes, or most of the time, traders who are coming in to the market don't really have that much capital. I know I faced that in my journey. And one of the things that could really help is if we can expedite the phase of really growing that capital, instead of having to grow $100 account into 1,000 and 1,000 to 10,000 and 10,000 to 100,000. Now I know. Eventually, if your skill is good enough, you'll be able to do that. That is very much true. But there also is a section of traders. So I'm not talking necessarily about the brand new traders, and I'm not talking about the extremely experienced traders. There are a large group of traders that are in the middle, and if they had slightly bigger capital, they'd probably be a little bit more effective. Why though? It's very important you understand why this is, because I know there's already a lot of disagreements here. So why that is because your psychology is a little different, especially a trader in the middle. That trader is sometimes profitable, sometimes not. We'll have profitable weeks here, not so profitable there. What is the main factor that's usually causing that? A lot of times the factor that's usually causing that is undercapitalization. Okay, because you are dealing with a $500 account and you make $50 from that account, you are not satisfied. And it's hard to really comprehend and get in your head that you made 10% of that account. Yet you know how to trade, but because you overtrade, you tend to give the profits right back to the market. Now, this is where a prop trading firm could be effective for somebody who does know how to trade, but is really impatient when it comes to growing the account little by little. Now, imagine if you're able to take that same $500, you were to pass a 100K challenge, and then you were able to use that 100K challenge or that 100K live account to actually make a withdrawal of 5K or 10K, because usually you have to make 10%, 8 to 10% of the challenge anyway. If you did it before for the challenge, maybe you do it again. Imagine now you withdraw whatever your profit split is, whether it be 7,500, 8,000. Imagine now you're able to start your account, your personal account, with $7,500 instead of $500. All of a sudden, when you're taking trades, instead of making $50, you're making $500 per trade. And that seems so much more satisfying for me to say, you know what, that's enough. I made $500 for the day. I can walk away. That's where it does become effective. And that's where it can become very helpful for somebody who's somewhere in the middle, but still has skills and can show that they can trade if they had slightly bigger capital to trade with. Another advantage of prop trading firms is the fact that they allow you to practice proper risk management, or matter of fact, enforce that you practice proper risk management. This is a great thing for a trader. Now, I know many traders take it as a way for them to trick you or a way for them to have you lose. But in reality, let's actually think about it. If I'm limiting you to not lose 5% in a day or not lose 10% overall on an account, is it really such a bad thing? It's not a bad thing, especially if I can master that. Imagine if I'm able to master that skill and I'm able to do well with a prop trading firm. That means not only am I a trader who knows how to make money, because there are many traders who know how to make money just by being pure risky and having plenty of capital to be risky. But if I know how to make money under proper risk, I'm really a true trader because I'm able to follow certain parameters that really allow me to really not risk too much of my account and still be able to effectively grow it. Proper risk management is always going to be the key in terms of surviving long term in this market. So it's not going to be such a bad thing that you follow the rules that the trading firms lay out for you. They're really there to protect you if you really think about it. And really, traders who have such a big problem with them sometimes are traders who tend to over leverage, traders who are not really there yet, who need a little bit more work in their skills. Those are the traders really who have such a large problem with that. But in reality, shouldn't be such a big problem if you are really skilled and you know how to limit your risk and maximize your reward. All in all, prop trading firms are a good option for traders, but there are also a group of traders who believe that no, I should just work on building my personal account. And even if that means I build it little by little by little, try to practice proper risk management with my trades, just try to be satisfied with what I'm making even though I'm not making much. Now, that's fine, and there are some advantages to doing that and thinking that way. Here are some of the advantages to actually going with your personal account. So first of all, you have no restrictions. Zero restrictions when it comes to your personal account. Meaning no restrictions on news. You don't have to worry about the prop firm rule about you can't trade news, or you don't have to worry about the rule of having a max daily drawdown or a overall drawdown. It's your money, and you trade as many times as you want, and you trade whenever you want. You trade during news releases, after news releases, whatever. But you're in full control without any restrictions because it is your personal account. That is a huge advantage there for those who just like to do things their way, who don't really care that the prop firm's rules are in best interest for you. They just want to be without restriction, do it the way they want to do it. And with the personal account, you have that. Next advantage we're going with a personal account is that you don't have to worry about any challenges. Now, we talked about how great prop trading firms are, but one thing we didn't touch upon is that there is that challenge phase that is a waiting phase, meaning I could be making profits in the market and I could be putting big numbers there, but none of those numbers are going to go in my bank account because I'm in a challenge phase. And oftentimes the challenge phase could last anywhere from 30 days all the way to 60 days. So you may have to wait 30 to 60 days or 2 months just to actually be trading money that actually is going to go to your account. And even then, when you get a live account with some of these trading firms, you usually have to wait another month before you can actually withdraw. So we're talking about a maximum of 3 months before you actually see any money. Whereas with the personal account, from the first day that I deposit the money in my account, I can start trading and I can start reaping the rewards on my personal account. That is a huge advantage when we talk about personal accounts. I don't have to worry about no challenges, no verifications. I'm all good to start trading and start putting money in my pocket immediately. Last but not least, I can withdraw whenever I want. Prop trading firms, again, great, but I don't get to withdraw necessarily when I want for most trading firms. Oftentimes, I have to wait a month before I withdraw, and sometimes that rule is altered after you spend a month or after your first month of withdrawal, and you can withdraw every 2 weeks. But even every 2 weeks can be a little annoying, especially if I'm somebody who likes to withdraw every week, or maybe I like to withdraw every day because I make money every day in the markets, and I don't want to put myself in a position where I give it back. So if I have a personal account where I make the money in the market, where it hits my trading broker, I can also withdraw that same moment and know that that money is going to be in my account that same day. That is a huge advantage, and maybe by far the biggest advantage when we talk about personal accounts versus prop trading accounts. The other thing is I can make money in the prop trading account, and maybe I made money the first day and the second day and I'm up big. But if I happen to violate one of the rules on day 3, 4, 5, I lose everything. And I don't have to worry about that when it comes to a personal account. So which is really better, a prop trading account or personal account? Now, I know you're looking for a direct answer. And maybe if I were to give you a direct answer, I would always say a personal account, if you are able to fund it with a decent account size, would always be better than a prop trading account. However, I think there's an even better answer than this. Both. They're both good. Meaning, it's okay to have multiple accounts. It's okay to have a personal account and a prop trading account. Why not? You can use one as a high risk account, you can use one as a low risk account, or you can use one as an account where I'm gonna fund my personal account even more, and I know that I have a backup as well just in case anything were to happen. Whatever you say, however you wanna spin it, there are advantages, more advantages that I would say to having both rather than having either one of them. So my advice, have both. Have your personal account, and especially if you're trying to build your personal account because you have small capital, use a prop trading firm to be able to fund your personal account. And as you're trading that prop trading firm, continue to fund your personal account. As your personal account gets bigger and bigger and bigger, then whatever you want to do in the future, if you want to let go of that prop trading firm, split your personal accounts into two personal accounts, whatever you want to do, that's fine. But I think the greatest advantage for an up and coming trader is to have both so that you can get the best of both worlds. All right, y'all. So ultimately, make sure you trade safely. It still requires a lot of skill to be able to pass these trading challenges. Don't think you're just gonna be a new trader and just pass. You're gonna end up wasting tons and tons of money. Trust me, I was there. I've wasted tens of thousands of dollars on trading challenges. You don't want to do that. You want to make sure you get the skill first, and once you get the skill, you should be all good and you should be raking in all the profits. I hope you guys enjoyed this video. Please like, share, and subscribe. Jordan the Maestro, take care.